to, for everyone, if you want to check out his channel, it's called Ask a Hedge Fund Manager, which is terrific that a hedge fund manager has a show like that. So you're going to love his channel. And today we've asked Nicolas about FANG stocks and whether we should invest in FANG stocks. What are the risks and rewards? Well, a lot of our listeners are beginner investors and they have limited cash to invest in the market. So we want to just take a look into that question and see what Nicolas might tell us about that.
First, this is a disclosure. I'd like to say that this is not specific investment advice because different people have different situations. But so the stuff I'm going to talk about is just more for general learning purposes. But if you have less than, say, $10,000 that you're investing, I don't recommend putting it all in any single stock, whether it's a FANG stock or whether it's the cheapest value stock in the market. It's just because that, especially right now with a lot of these bigger tech companies, they're pricing in valuations that imply 15% annual earnings growth rate for the next 5+ years at already the current size. The valuation in terms of their price multiple times their future earnings, not this year because of disruption of the pandemic, but the end of next year, has doubled since March and is close to all-time highs for most of these companies. So just from a valuation perspective, you are paying a premium if you're buying at prices today.
So I just want to let everyone know, like, he is saying it's a very high premium to get into. So just pay attention to that part.
Yeah, just from a longer-term perspective, the risk-reward right now is not favorable to be buying those stocks.
Okay, so it's not favorable.
Yeah.
So can you tell us a little bit how you got into investment and started your company?
Yeah, I think your audience may like a lot of my story because the person who first taught me about investing in the markets was my grandmother, of all people.
Oh, wow.
Yeah. And when I was 11, she gave me stock instead of cash for my birthday. And then I kind of learned about basic value style investing from her. And then I did a mentorship program while I was in university with a former hedge fund manager. And then my career went through there. And I've worked at both large hedge funds as an analyst, and I've started my own on a smaller scale. And my specialty now is I've mainly focused on top-down macroeconomic themes in the equity market and the options market.
Yeah. Now, when you say about macro, a lot of our investors are beginners. Could you explain a little bit what that means to them?
It means that I try to look at what's going on in the world, whether it's current events, economic trends, or specific themes in the marketplace, and try to figure out where the consensus narrative is mispricing something compared to the actual future potential of a given company or country or currency. And so, yeah, it's more just thinking on a broad scale and looking at what's going on in the world and trying to figure out what the winners and losers are and trading accordingly versus looking at a stock just because it's cheap and then working your way up. It's top down versus bottom up.
So that's very interesting. I want to go back to your grandmother. So this channel mainly is Girls Guide for Investing for Women. So your grandmother, like, how did she know about stocks? I mean, it's just fabulous, exciting news that your grandmother. So back then, we didn't even know that a lot of people were paying attention to stocks. Can you tell us a little bit more about her?
Well, I mean, my grandma's from a Swiss family, and Swiss people in general tend to be good with their finances. but
the thing are Americans.
So, when she started my grandparents started towards retirement, she started researching more about like what's going on in the financial market and the stock market, because they were very diligent savers throughout their careers, and that along with some inheritance, they built a nice nest egg and they needed to figure out how to manage it. And so that's how she got into stocks, and that's how she ended up teaching me and my cousin, who also worked in finance for a long time, about the financial markets.
So you got your first stock from her, you said, at age 11. kid, were you like, oh, what's a stock? Or you're like, I didn't get cash to go buy like whatever your favorite toy was or video game?
Well, back then I was trading Pokemon cards, and I learned my first experience of what happens when you have a bubble, because that collection lost all of its value within 18 months.
Oh, man, no.
So,
Sorry about that. Oh.
well, yeah, it was my first lesson on bubbles. This is also the time when you had all the tech bubble broadly. Sorry, well, I don't know what that sound effect was, but you had the...
for losing your Pokemon.
Okay, but yeah, I mean, this was the time when my mid-childhood was the time during the technology bubble in 2000, where basically any stock with a .com would be going up, and this caused a lot of speculation in other things like Pokemon cards and Beanie Babies, which I don't know if you're familiar with, late 90s collector frenzies, but there's just too much money chasing too few assets, and it created a huge bubble, and I was indirectly part of it back then. And then I got these stocks shortly after that bust, and I was wondering, I was like, why are you giving me this and not like a tech stock or something cool? And it's like, my grandmother explained, because it was a railway company, and so my grandma explained to me why, like how you value companies not just on what like whether I've heard of them or not, but there's actual fundamental indicators that you can use to help figure out what's a good investment versus what's a bad investment.
That is really exciting. And so, were you interested in like stocks at that point in finance, or were you? How did you start being in that kind of career position with finance? Did you continue that path, or?
I mean, I didn't really take too much of it back then. I got back into trading and investing when I was in high school, and that's when I really started to educate myself more about the markets, and I thought they were quite interesting, and I thought it was something I could do like when I'm 60, like my grandma, and save a bunch of money first in some normal job and then get into the financial markets. And then when I was in college, I learned that you can actually have a career in finance from my other mentors. So that's kind of how I got into it professionally. I didn't think it was a possibility until I was about 20.
So at college is where you found your love for, were you a finance major or a business major?
I was an economics major, and I did an entrepreneurship program too.
Oh, and that's where you did an entrepreneurship program. Is that where you were mentored by the hedge fund manager you were speaking of?
No, that was part of the economics department.
Okay.
Yeah. And all I knew before I got into finance is that I wanted to be an entrepreneur, because I'm from four generations of entrepreneurs in my family, and I just knew I wanted to work for myself by the time I turned 30. But I had no idea how I was going to go about doing that until I kind of learned about my career options while I was in university.
And where did you go to college?
UC Santa Barbara.
UC Santa Barbara, that's a very great school, yeah. Because a lot of people, our listeners, they want to be entrepreneurs, and they, are looking for how to start. How would you suggest to them if they were interested in going to finance? Did they go to college? Did they get a mentorship? Is there any kind of suggestion for them?
It's like for a career in finance?
Mm-hmm.
Yeah, it's a lot different than when I was in college. When I was in college, I graduated shortly after the financial crisis, which made my life a lot harder. And there was still this idea where that if you didn't go into an Ivy League or similar caliber school, that you just weren't intelligent enough to do finance. That fortunately, due to a lot of those Ivy Leaguers now preferring tech and just a change in the way the culture is now, that's not as big of a barrier as it used to be. So I would just say, if you are interested in finance, I'd recommend probably studying it, like some sort of business degree in college or a mathematical degree, something involving with numbers, so you have a good understanding of it. There's different types of like traders and people in finance depending on your skill set. There's more coding oriented people and algorithmic traders, which are more in the quant space and more computer science background. There's more traditional macro and value-based fundamental style investors, which is more of a financial background, and then there's a lot in between. And Yeah, so and then the other thing I would do is I would start, if I'm already like a professional and I'm looking to transition a little bit, I'd look into the CFA program, because it's kind of a postgraduate program that gives you a lot of the fundamental basics about the investment management industry.
Oh, great. Yeah. And so you're pretty young to have your own company. So how did that come about that you made the entrepreneurial decision to have your own business?
I worked at a bigger shop for several years, and it was just a time in my life I was ready to move back to where I'm from, and I saved up enough money through my job to be able to ride out the initial phase of growth. And now I have a business, and you just kind of need to. My view on starting a business, though, generally, is you develop. The whole point of having a job is to develop the skill set that you can eventually sell to your clients, like from a service-based business perspective.
That's great advice.
Because you're not. I don't really like the idea of people starting businesses such as like a restaurant or a random tech app if they have really no background in that. The easiest way, and starting a business is hard, don't get me wrong on that, but the easiest way to start a business would be to try to monetize your existing skill set and find a client base for it.
Oh, great. And how would one, if they would like your services, where do they go? How do they contact you? Can you give us some, ways that they could contact you if they would like your services?
Yeah, I think my audience for my services is more institutional investors. I kind of did the channel to kind of reach out and give back to the community a little bit.
Mm-hmm.
So the way, if they happen to be listening to this, I recommend going to my website, davosig.com. You can follow my YouTube channel and Ask a Hedge Fund Manager, or you can follow me at Twitter at Nicolas Pardini.
And Nicolas, you also have a podcast too. Can you tell them where they can listen to you on the podcast?
Yeah, it's called Nothing Exempt. It's kind of where I put my thoughts about things other than finance, and I do it with my best friend.
Oh, that's great, because we have a lot of podcast listeners, and they love learning, so that would be really exciting. So is there anything else you'd like to tell us with you were talking about bubbles? People who were saying the market has a bubble. Do you think the market's in a bubble? Is it going to crash? Do you have any thoughts or insights, or is there anything you'd say about that? Or
it's been a little bit tricky, to be honest with you, because a lot of valuation indicators would point towards a bubble, but when you have interest rates at 0% and the amount of liquidity in the financial system, these imbalances can last a lot longer than you would expect.
Oh, okay. And is August traditionally, is that like a good month, or is there any kind of indicators for August traditionally, or is it going
August seasonally is kind of a slow month because a lot of people are on summer vacations. But I'm not a day trader. I think a little bit longer term. So I don't try to factor seasonality too much into my investment process.
Oh, great. Well, we really appreciate you coming on the show, Nicolas. And for those of you who are listening, this is Nicolas Pardini from Davos Investment Group, and his YouTube channel is Ask a Hedge Fund Manager. And we hope to have him back like on maybe one time a month to ask the questions from our audience. So if you have any questions, please, when you make a review, put a little question, and we'll see if we can have Nicolas invite him back. We really appreciate you being on your show our show today, Nicolas.
Thank you for having me on.
Yeah, you're welcome. Everyone have a great day.